What's up, YouTube fam? It's MQ Mondo. In today's video, we're going to be going over a trade recap that I took today, making about $500 in about 10 minutes, trading the MES. So without further ado, we're going to get right into the charts and show you that trade setup, the confluences that I took, and how I capitalized off of those. Let's go. Okay, let's move my webcam a little higher. Okay, as you all can see, it's around 11 a.m. right now, and I took this trade around. I entered this trade around 10:54, around 10:54, 10:55 a.m. I'm gonna break down the confluences that helped me take this trade. So we're gonna hop into bar replay mode and just show you what I've seen off market open. Let's go to 5 minutes. What I seen off market open. So instantly off market open. Let's delete this. Off market open, I seen that it was a SMT diversions created between MES and MQ, which means price was gonna want to run lower to take out levels of liquidity on both indexes. I would have loved to have caught an entry to the downside off these, but I did not. Seeing as if we were bullish on the higher time frames on the 1 hour, as you can see, we're making lows. Let me just show you. And I covered something like this in my bootcamp video about trend. You always want to trade with the trend. So we made a low, a high, higher low, which I could have went all the way up here. High, higher low, higher high, higher low, higher high. And so we're in an uptrend. Basically, this is going to be the higher low to make this leg higher. So with me knowing that, as far as catching the small move to the downside, I wasn't too mad if I missed it, which I did end up missing it because price didn't give me entries. So if we fast forward off this SMT, what does price do? I have these areas of liquidity marked down here, which is internal liquidity. And we have London lows, which were both key draws on liquidity to the downside. And of course, we have this S&T up top, which is also London highs, which is a key area of liquidity to draw to, as well as with this S&T leaving these relatively equal highs. I knew that I would get an opportunity to maybe trade to the upside, so I patiently waited. Off market open, we got candle, big dump down due to the S&T, which was expected. And then once price took out this without giving me any sort of entry, like it didn't retest to fill this gap. It retested on the 1 minute time frame, but it was shortly after just 3 minute got. It was shortly after the 3 minute got closed, but it wasn't. It wasn't. It wasn't. It didn't retest. It didn't close or inverse this gap before it retested on the 1 minute. So I was kind of skeptical. Let me mark out the gap to show you. I was skeptical on entry there because I was really waiting on this 15-minute or the higher time frames to tell me the story about what was going to happen in the market today. And so this big move down didn't inverse this gap, or it didn't inverse this gap, which was a key gap. As you can see, this gap right here is a key gap that is being respected multiple times. You got this wick that respected it once, this respected it, this respected it, this, and this body respected it. So that's 4 candles that respected this gap. So I knew that this gap held major weight in the market. So price didn't inverse that gap in time enough for me to enter off this 1 minute retrace from this wick right here at the top. So now that all my areas of liquidity has been taken out in the downside, well, I didn't take out London lows yet, so let's keep going. So boom, now that it took out all my areas of liquidity to the downside on MES, it left these areas of liquidity alone on M and Q, which means that price is probably gonna run higher eventually, leaving another SMT divergence if we marked it out. So we have this, swept this high, this low, and but off this low, the price is all the way up here on right here. So that has the SMT diversion because we swept on ES, but we failed to sweep on NQ. So just SMT diversion. So now off this, I'm looking for gaps to be inverse. As you can see, we left behind this 3-minute gap that I want to get inversed, this 5-minute gap that I want to get inversed, maybe a 15-minute gap's being left behind. So I'm just waiting to see price push back up. And the reason why I took this trade on MES is because, as you can see, MES has dug deeper and actually swept liquidity, as well as if you go to the higher time frames, we have a volume imbalance, or like an imbalance, a huge imbalance here, including this body. And as you can see, if I drag this all the way, price is sweeping liquidity, sweeping London lows, and tapping into this big area of this big imbalance, this big area of rejection. So with that being said, I'm looking for price to push this higher and give me reversal confluences to the upside so that I can enter my trade. What I like to see is gaps get inversed on the 5-minute or like the 3-minute. 3-minute and above, 3-minute kind of risky, more so the 5-minute. I know once a 5-minute fair value gap gets inversed, that most likely price is going to keep running to that side. So I like to wait for those confluences. As you can see, price pushes, it inverses. We scale down to the 1-minute time frame and see if we get entry. The 3-minute time frame. 3-minute time frame produce this fair value gap. Let's see what 1 minute shows us. 1 minute produces this fair value gap. We dig back into this, which I marked out, waiting for price to, I want to see price reach a discount. Well, yeah, discount. So price runs. We finally reached that discount. Reached that discount off this, which means we dug lower into the below this 50% mark that I marked with my Fibonacci. And then here are my Fibonacci settings if you want them. You only need five coordinates for your Fibonacci, and I like to use solid colors and one darker or more colorful color to mark that area of the 50%. So once we reach this, now I'm officially looking for buys because we left these highs up. We left this high, which is the area of liquidity now. We left, of course, we still have, let's go on 5 minutes to make this easier to see. Of course, we got these highs up here, London highs that never got swept. Because today, ES left behind a bunch of highs today, which gave us a bunch of areas of liquidity to draw towards. So as you can see, we have those. So now I'm looking to see what price is doing. If we go to M and Q is tapping into this 5-minute gap and respecting it. As you can see, the candle closed with the wicking out of that 5-minute gap. If you, let's see, if you do this, drag it down, as you can see, the consequent approachment, which is this 50% mark, M and Q is not going down here, and it is stopping way before the consequent approachment, meaning that this fair value gap might have a very strong, it's a very strong gap. So we go back to MES. Now we're looking for entries. Let's delete this SMT because it doesn't matter anymore. We have this SMT below. We swept back into discount. So now we're looking for confluences to the upside. 3-minute, what does it show us? 3-minute goes up. Does 3-minute inverse anything on 1 minute? This candle is inversed on 1 minute. This small fair value gap is inversed on 1 minute. Since we already got all our confluences, this is inversed on 1 minute. Since we already have all our confluences, we can enter off this. Let's delete some of this stuff to make it a little bit easier to see. Just this gap we're focusing on now. This is the only gap we're focusing on now. This is an FBG, which is an inverse fair value gap on the 1 minute time frame. And I think I waited for a break of structure above this candle, above this wick, but you could enter off this inversion since we got all our confluences. Like we got the liquidity sweep to the downside, creating an SMT diversion between M and Q, which it didn't sweep these lows, and MES, which did sweep these lows. And then we also have this big hourly and 30-minute and hourly and 4-hour volume imbalance slash fair value gap, whatever you want to call it. This big imbalance, which got filled when liquidity was swept on MES. So we're filled there. We're filled on the 15-minute. And then we push higher, inversing on the 5-minute, showing that higher time frame shift in a higher time frame change in character, or price action is changing its direction. So now that we have all this, we wait and see the price draw back into a key area of rejection, which it did. It drew into discount below this 50% mark that we marked with our Fibonacci. Now we're looking to see if it fills any gaps, which it did on 1 minute. It filled this same gap that was respected before, and it swept the liquidity inside this gap. So 1 minute gap respected, 5-minute gap inversed. Once we respect this 1 minute gap and push higher, this 1 minute bullish fair value gap is inversed, which is our final confluence to get in this trade. So now we place buys because we want the market to go up. 6 contracts. We buy. Stop loss below these lows. Take profit above these highs. Contracts. Stop loss below these lows. Risking about $500. Take profit above these highs to make $600. And let's see how this play. Let's see how this trade works out in our favor. Our first take profit is going to be this high, so we're going to be looking to scale out of our trade and reduce risk as fast as possible. So price runs. Rejection. What I like to do most times is when I know that I have a TP1 that I want to be hit, and I know I'm going to take half profit in that TP, I want to set a limit sell order at my TP1. So when price runs into that TP1, which it just did, we are now in a risk-free trade, and it took our profits. So if we check our calculator, boom, we just made $300 on that trade. $300 on that trade, and now we are in a risk-free trade. We can't lose now. So now that we can't lose, wow, let's move this out the way. Okay. Now that we can't lose, press confirm. Our stops are at break even. Now we just let price run and run to see if it takes out any other areas of liquidity. This is my second take profit. So this line right here is my second take profit. So we're gonna sell the contracts here. So the contracts there. We just keep trimming as this goes. And now we just let the trade play out as we get that bullish push. Now we want to trail our stop because it produces fair value gap. So now we can trail our stop. Let's mark out the fair value gap. Trail our stop underneath this 1 minute fair value gap because we don't want to see price dig below that. We want to see price respect that once it returns. No, it's really small, but gotta be able to see those in the market. Price digs back. Respects. It's chopping. And just like that. Full TP on that trade. Let's see the ratio on that trade. We entered longs here. Let's see what our risk reward was. Risking this much to make this much, which is a 1.3 risk to reward, which is not bad. Not bad at all. Truly, honestly, you could have put your stops underneath this inversion fair value gap, considering that price did never return to it. But I chose to be safe and put my stop all the way below that low, just in case price wanted to wiggle more and tap into this fair value gap again, or tap into this wick to push higher. But that pretty much concludes the trade recap. If I pull this back up, as you can see, I don't know why it says 297, but as you can see, should be 500 on this trade. If we go to P&L Ledger, this was today, 520. Let's go back. It's put me up almost $2,000 on the month, so a really good month for me. Yeah, and that's it for the trade recap. Thank you all for watching. Don't forget to like, comment, subscribe, share with your friends, turn on post notifications so you never miss videos like this that I post. As well as when you comment, leave in the comments any questions you may have or any concepts that you want me to cover on this YouTube channel. It's been a pleasure. Also, if you want to join a trading community and trade with me live as well as others and build together, I would strongly advise that you join the Income Architects Discord listed down below, as well as if there were any concepts in this video that may have seemed confusing, make sure that you go and watch the day trading bootcamp that I have. That will be listed in the comments below as well. Listed in the description below as well. So, yeah, peace out.